Are you wondering if you've saved up too much or thinking about your insurance? This week, we have two very interesting webinars just for you. At 10 a.m., we have How Much Savings is Too Much Saving. That will also discuss how best to utilize your savings. And at 12, we have a webinar on what's really happening in the life insurance sector. This will be hosted by our very own research analyst, Sanjay. Click the link below to register, and we hope to see you all there.
In today's video, we're going to address a very important question that's on every investor's mind. What if the markets fall from here? Now, every investor is thinking about this simply because there's a lot more information on our plates that could push markets downwards. Firstly, and I think what's dominating headlines is about the tariff deal. So when we look at what Trump's dialogue is and whether India is able to move that negotiation forward, we seem to be at an impasse. So clearly, tariffs could be one thing that plays spoilsports in the market. Of course, when we start thinking about the US economy itself and its impact on global economic growth, there are things that we need to worry about. The most important data that came out in the last 1 month is how jobs data was revised to exclude almost 250,000 jobs. So we saw two revisions in May as well as June data, and this has got a lot of investors thinking about whether the US is heading towards a recession or what could be in store for global markets if the US goes through a deep slowdown. Back home, the results season has been a little bit tepid. You've not seen great results. You've not seen something too bad either. At the same time, what is clear is that the economy is slowing down. While there's a little bit more confidence in India than the rest of the world, we are dealing with a slowing economy and a lot more uncertainty in many parameters. So this creates the perfect kind of setting for you to question where markets are heading. Now, if you want to navigate this market with a little bit of strategy, then there are 3 things that you can follow starting now. So clearly, investors are thinking about markets and where they're heading. And if we're heading into a correction, there are a few things that you can strategically do to stay ahead of the curve. The first is to not blindly buy the dip. Now, in the last few years, buying the dip has served investors really well because the same set of ideas have been performers over a period of time. Now, as the context and the nature of the market shifts, even the next set of winners are going to be different. So investors really need to focus on participating in the next set of winners and not the current set of winners. So buying the dip is not a strategy that's going to serve you very well. The second thing is to be more prepared with your investing. This essentially means that many businesses that you own could go through a re-rating either because of policy changes or because of the growth dynamics in the Indian economy. Whatever the case may be, the most important thing for an investor to do is to restructure and realign to the current narrative and economic context. Most of us start looking at our portfolios in terms of monetary terms rather than opportunity costs. So there needs to be a mindset shift where you start thinking more about the opportunity cost and less about whether you're notionally losing some money on a restructuring decision. So the most important thing or takeaway from this is that what you do today is about how you're creating wealth in the next few years rather than the short-term impact of any decision that you take on your portfolios. Last and not least, diversify out of equities. If you're the kind of investor who worries about market corrections, then you have plenty of opportunities on your plate right now, which could give you a favorable risk reward. You could look at fixed income, you could look at even precious metals at the right time and at the right price. So given that there are other options on the table, it's important for you to exercise your options and have a well-structured portfolio that manages risk and is able to perform for you even as the market context shifts. If you're still worried about a market fall, then it's time that you talk to a professional about how you should be navigating this market, and you can reach us with a WhatsApp message at 9500027285.